Alright guys, you want to see how easy it is to make money in a stock market? Like for real? You want to see how fucking easy it is? I'll show you how easy it is. We're going to pick one asset, but you could pick any on this list. I'll prove that in a minute, okay? But look, don't overcomplicate this. Don't try to buy the bottom. Don't try to time the top. Blah, blah, blah. Pick a commodity. Pick a crypto that's got fundamentals behind it. Pick a stock or a good business that has fundamentals behind it, and do this. This is what you do. Okay, so we're gonna choose ETH because it's like the coolest example of this. But you'll see when I show you that this just works with everything. Okay, so I'm gonna turn all this shit off because it doesn't really matter. We'll keep 200 down there. All right, so you can ignore these lines on the chart. In fact, let me go ahead and wipe those out real quick. Those are for shorter term trades. Don't need them anymore. Not focused on this at the moment. Okay? So look, here's how easy this is. You use this indicator, which if you go to indicators here, this is free. You look up EMA Cloud 150/250 by Yo Adrian. Okay? You put that on your chart, and then it's going to look a little different when you do it, but you bring up your settings. Oop, wrong button. You bring up your settings here, and you make your inputs 5, 9, 21. So you have the 5 EMA, the 9 EMA, and the 21 EMA on the daily chart. And then you can set the colors like this. Alright? So feel free to pause the video and copy this stuff. 5, 9, 21. And this is the colors that I use personally. You can do whatever you want, but that's how I do it. And then that's the background, and the cloud colors are right here. Okay? And then these are checked. This is just default, I believe. I don't think I changed anything here. Pretty simple. Okay? Now, what do? See the red and the green? When it turns green, you buy. When it turns red, you sell. So first, we're going to show the bad case scenario for this, right? So if you bought on green and sold on red, this turned green this day right here, okay? But even if you waited and you bought this candle, right? And this is Ethereum, so this is like very volatile. This is probably the most volatile asset. So there you go. There's a 7%, 8% loss in that case, right? If you waited till the top of this candle to buy it, right? That's like the worst case scenario, or where it fails you. But if you know how to use this, you would have bought or been in right here, right there that day, okay? Right when you seen that it was about to turn green is when you would have put your position on, and you would set a stop loss like down here under this low. So if you did that properly and you bought on this day, your stop in that scenario was 4% down. If you bought there on that day and you bought the top of that close right here to when it turned red, you lost less than 1/4%. Alright? So that's the worst case scenario. It is. Okay? Now, that's a one-off. Alright? If you did it in this scenario, you bought the top of this candle and you went to the day that this went red, you made 2%. Alright? Again, those are like the worst case scenario. So here, even in this move, right? So you bought, I don't know, let's see. This day it turned green, and you sold the bottom of this candle, you still made 10%. Okay? These are in non-trending moves. These are in sideways moves, consolidations, okay? But why do you do it? Because when you get a trending move, right? So when you do it in this case, You bought, it turned green this day, so you bought here, and you sold somewhere right here. We're going to say here, okay? You made 148% on that trending move, right? And if you didn't sell when it turned red, you'd have given back a lot of money, right? Because there's where it turns green again, right there. 31% drawdown it kept you out of. All right, so here's another fake out right here. Same deal. So you buy the top of this candle and you get out when it turns red, 6%, right? So like, again, proper risk management. You don't dump your full account into this shit, but if you're swinging stuff, right? And like you combine that with technicals, right? Like you would have known that this wasn't necessarily a great place to buy because on that candle you're up against resistance. So maybe you wait a second for it to prove itself, right? But like, dude, for real, your worst drawdown on Ethereum. We're talking about cryptocurrency, the most volatile asset there is. Your worst drawdown in every scenario I just gave you was like 7%. Okay? Now let's look at a stock when you do it with a stock. So let's pick, I don't know, Amazon. I mean, do you see it? Do you see it? Turn green this day and turn red this day. 26%. Now obviously it turned red here and immediately flipped back green, so you could have got right back in if you wanted. But I mean, if you didn't and you're like, this move's pretty close to being over, you missed out on 10% from there. So what? So what? So what? You made 26%. All you had to do is just look at a freaking color. Okay? I suppose, actually, right here is where it turned red. So you made 6%, right? And then if you bought back in from there when it turned green again, right? Didn't turn red till here. It's another 20%. Same thing here. Bought back in because it turned green again. Sold when it turned red. It's another 5%. So now you're thinking to yourself, you could have just stayed in the whole time. Sure. But what if it turned red and really went red, right? Like, you got to have some way to know to protect yourself. So this works for that. It does. And there's no reason you can't just hop right back in. Okay? But you can see when you get a trend that turns red, how much it protects you. I mean, holy crap, that's a 30% drawdown on Amazon. If you had 100 grand in there, that's 30K, right? And if you did that and you sold when it turned red, then from the very top to the day it turned red, you lost 5% off the top of your move that you made, you know, all this money on, right? Like, you're not gonna care. You're not. If you bought in down here or here or here even, right? Like, even in this scenario, you're up 5%. So you gave back, you know, half of it, but you still made money and you're protecting yourself. The key is it's little wins compounded over time add up to market beating results. Okay? So, all right, so that's Amazon. Let's find another example. Here's Meta. Do you see it? Do you see it? Buy when it turns green, sell when it turns red. And this happened the other day, right? This literally happened the other day. So, like, it's not bulletproof, right? But it turned green here, all right? And it came up to like 630. And then when it came back into this moving average right here, this 623, I bought in, right? And then it went up and it fell down and the cloud flipped red again that day. So I lost 3.7%, right? if you put $10,000 in there, you lost $300. Like, so in the grand scheme of things, you know, that it just works. You can't use this in a vacuum. Like, you have to combine it with market sentiment, macro, all that stuff. But like, it literally tells you when to buy stuff, you know, it like, and when to get out, right? So like Microsoft right now. All right. If you were in the day it turned green, which everybody in my Discord should have been, you were in at 381-ish. I told everybody to buy it here. I was telling everybody to buy it right here because I knew this was coming. But right here was the day, if you want to wait till confirmation, this was the day that you bought it. So even after we exploded from there, right, and we went up all the way up 21%, right, I was selling into this whole move because I'm like, all right, this thing's getting pretty overcooked here. Like, this was a ripper of a move here. I was selling into that. But if you're still in, you're still in. And that's fine. Like, you're up 10%, all right, and there's no indication that you should get out. The trend is still green. So, you know, could this thing come down here? Sure, it could, right? Well, actually, if you look, it turned red right here once, so that protected you. You got 7%, but then told you to get right back in. So if you did that, in that case, even after this huge drop, you're still up, right? You see my point? Like, you're not going to time the absolute bottom and you're not going to time the absolute top with this tool. But if you're swinging momentum in a stock, it fucking works. It fucking works. Even on the littlest moves. Look. Look. Green. This day, here's the very top of that candle. You'd probably wait and you'd buy this next day. So somewhere in here. And then it was red here. 3%. Right? Like, so even when you get the fake outs, like, usually you still end up walking away from the thing with a little bit of money in your pocket, or you break even just about, right? So, like, I don't know what else to tell you. But when you're deeply oversold, and if you want it to work flawlessly, you can use the weekly, right? The weekly just don't miss. It's just green and red, period. Like, don't even use it on the daily if you don't want to. Right? Use it on the weekly time frame. If you're more long-minded, then you could have just done this. Boom, you bought here, January 2023, and it told you to get out this day in January of 2025. So 2 years, you made 69% on Microsoft in 2 years. All right? So then you were protected through the entire tariff crash. Where's the low here? 20% of downside avoided. And then you got your signal to buy right here on this day. This was the candle right here. So if you bought this candle, right, which it ripped, right? So, like, again, you can't use it in a vacuum. But if you simply wanted to go off this indicator, and you bought here when it turned green and you sold when it turned red, you got 15% in like half a year. That's pretty good. It's pretty good. And now, what do you notice is happening with Microsoft right now? Right? So it just turned green, and I had you guys in down here. But it just turned green on the weekly, okay? So, and you're pulling back into that range. Could this move get faded? 100%. Honestly, wouldn't surprise me. Wouldn't surprise me. But you have possibly the best entry you could ask for on a longer term time frame right here, right? Because, like, if you get in here, you get in right here, and the stock comes down to this line right here, this is going to turn red again. So if you were to enter here and the thing turns red, you're going to lose less than 4% on your investment, and it's going to stop you out. Okay? So, like, Yeah, I mean, it just works. And like the more broad of an investment tool it is, the better it works typically, right? So if you use like an index fund or an ETF, I mean, look at this thing. On the weekly time frame, it doesn't miss. It doesn't miss. This is SPY. Does not miss. Right? And like the days where you come flying back into here are going to be freaky. But like it doesn't miss. Because it won't just turn red unless the market crashes. This is going to work. And honestly, even in a crash, like so the tariff thing was pretty much a crash. If you bought when it turned green way back here, and you weren't buying in here, you're buying when it turns green. That's what I'm saying. You buy when it turns green. Okay? You bought when it turned green. Sold when it turned red. This is the big fat nasty candle that turned it red. So it was really like this day. 51% over May of 2020 to January of 2022. Captured the entire bull market. And then this is the bear market. It kept you out of the entire bear market. It told you not to go back in the entire bear market, right? Like it just does. It works. So here it turned green. So maybe you're like, oh, this is it. We're changing momentum here. And you bought the top of this candle, and then it turns back red again on you down here. 8%. That's in a bear market, right? So like that's the worst case scenario. Okay? So you can't solely use it in a vacuum, like I'm saying. Like there's ways to tell that you're getting these little fake out moves, right? Like look at the volume here, it's really low. Volume here is really low. Volume here is really low. And then the day we start the big move, this is some convincing volume coming in here, right? So then even here, you bought this day, turned green. This day, you sold the day it turned red. Say you sold the bottom wick, which if you did, you're crazy. I mean, it's literally, you can see that it was going to turn green, red before that, but like, if you sold the bottom of this wick, even then you made money, right? And then you're like, oh, I'm right back in again, right here on this day. I mean, and then told you to get out this day if you sold the bottom of the wick, but you'd sell it closed, right? So 30%. You made 30% just trading a color over a year and a half, right? That was the last little pump we had. And then we took a poo here in April into March, or beginning of, that's 2025, sorry. Thinking of this one, right? So we rolled over. Market told you to go risk off right here, right? So that protected you from 7 to 8% drawdown. You never knew how low it was going to go. It could have gone way lower, right? You just play in the color. You don't know. Let the moving averages tell you. Okay? And then it tells you to get back in either this day or this day you bought it, right? So even if you bought the top of this candle, right? SPY is up here right now. You're up 6%, right? And like each case I'm doing this, I'm showing you if you bought the absolute top of that candle or sold the absolute bottom. Like I'm trying to show you the worst case scenario. But if you're using your intuition and you're using the other tools you have at your disposal, you can do better than that. But like the point is, it protects you. It protects you, right? So even if you don't maximize your returns by buying the absolute bottom or the absolute top, it makes sure that when momentum fades, you're out of the market. It's that simple. It really is. So that's SPY. SCHG is another one I like to use. This is growth. Look at it. This is on the weekly time frame, so every candle is a week. I mean, you see? And then you're like, oh, I missed all of this, right? This thing hasn't just, like, this could just be the beginning, to be honest. It could. But the thing that's not convincing about this particular move is it's very low volume. But we did have a big bunch of volume come in right here for some reason. But so who knows, right? But like again, if you bought the top of this candle to where we are today, you're up 5%. Okay? But if you were smart, you'd start accumulating in the red phase at some point, right? So in this case, we got super oversold on this day, right? On this day, we got crazy oversold, and it just so happened to be the end of March, like the last week of March. Seasonality tells you that the next month is usually pretty good, and the market's sitting super oversold on the weekly time frame. Look what happens every single time the market gets oversold on the weekly. Look, here's an oversold. The next day, you went a little bit lower. This is Liberation Day. This is the tariff crash. So you bought here. You had to endure one more day down, and then it was just off and sailing, right? And then you had the green to confirm that that was what was happening, right? Once again, let's go back. Okay, so here's oversold. If you bought the oversold condition, the first oversold condition, that was this day, right? So then you came and you got oversold again, which was this day. So from this day's close to that day's close, you had to endure 5% down. Okay? But that was it. You bottomed on the second day of peak fear, and then the thing fucking ripped. Turned green for you. And then immediately turned red. This is the bear market, by the way. This is the bear market. Right? And even if you bought on the oversold, right here, this first oversold signal, right? Then if you just held from there to the bottom of the market was not even 10% more down, right? So like what I'm telling you is for long-term investing, this tool combined with the relative strength being oversold on the weekly time frame on any index fund or ETF that's like a broad market tool, it just works. And you can check it. Look, here's this is COVID. This was a big crash, right? This was crazy. This is the Schwab Growth Fund, by the way. So like from the top to the bottom, this thing was down 35%. So basically the whole market was down. Worse than that even. I can't remember how much, but it was bad, right? But once again, if you had this thing on, you would have known to get out right here on this day. See how it turned red that day? See that? And even then, you could have seen this big, nasty, huge sell volume on this day, right? And then you could have seen that this was coming down, the moving averages were crossing, and you could have gotten out this day. Like you had indication that it was coming right here. It told you. It told you. The moving averages don't lie. Alright? So let's say that you got out at close on this day. You missed 25% of that 35% drawdown. Almost the whole thing. Right? It protected you. Once again. And then, just so happens that the bottom there, like almost the bottom, was your extremely oversold condition on the weekly. Like you're deeply oversold here, which really you hit it. Yeah, I mean, you didn't hit it until this week. Yeah, this week. This week, if you went to the daily, I'm sure it was probably more up here somewhere, right? Probably right on the 200, right? But, you know, it's not that hard. You buy when the relative strength is way down here. You just do it. You just do. You just do every time. And you don't buy when it's up here. You don't. It's overbought. You buy oversold. And look how well it works. Look at oversold. Right here. Look at that move. Oversold. Look at that move. It doesn't matter where you get in this mess. Like it, you just buy there and you just sit on your hands. Okay? Alright? Let's go back. Oversold. Okay? Did it take longer? Yeah, because this was the bear market, right? Oversold. You buy again on this oversold. Right? And you just wait. And I mean, shit, it was a while, right? It was like half a year. But you basically just traded sideways through that whole period of time. Like, you didn't really go up or down much. And then look at, you know? Like, okay, all right. And that was the bear market, all right? Look here, oversold. It's COVID. Face melter. The world's going to end on this one, remember? Look at here, oversold. Ripper. We're going way back now. Now we're at 2016. Didn't quite get to oversold, but you know, you probably would have started buying around here, maybe. I would have. Right? Look at that. Okay? This one was weird. I don't know what happened here. This flash crash. I don't know. But you never got your signal to buy there, so who knows? But you got your signal to get out before it happened. Look at that. So you got a red candle or a red flip this day. On the weekly, on this week, you got it. And it protected you from that massive move down. Right? Okay. Does that mean you're going to get out perfectly every time? No, but it's telling you to. Right? Like, investing has risk no matter what you do, but this takes so much out of it. And I'm trying to make a point here. At this point, we're back in 2011, 2010. Look at oversold, rockets. Oversold, rockets. Oversold, rockets. Oversold, rockets, dude. I mean, and if you go look at SPY, which is the S&P 500, it's going to be the same freaking thing. We didn't even quite make it here. Oversold, rocket. Oversold, rocket. This is the bear market year. Look, if you bought the first oversold condition and just waited, you'd have bought in just before the lows. You did go a little bit lower a few months later, but eventually, rockets. Right? So it's telling you you're getting good value is what that's telling you. Doesn't matter how long it takes. Oversold, rocket. Oversold. I mean, I can literally go back to the beginning of SPY. So here's the great financial crisis. This is the '08 crash, okay? And what do you notice? What do you notice? Even in the '08 crash, on the weekly time frame for the relative strength, your first signal to buy was here, right? It was. I would have bought here. All right. And what do you notice? The cloud turned to green and then immediately turned red again, right? So if you caught that, you'd have got out. But let's say you didn't. Let's say that this is a true stock market crash right here. This was literally like behind the Great Depression with the worst crash of all time, I believe. Okay? Maybe the .com bubble. We'll go look at that in a second. But so there was your first signal to buy. That doesn't mean you put your life savings in there. It just means it's a good time to invest, right? And then, yeah, I mean, if you stayed in from there, to down here, that's painful. 100%. 100% that's painful. But what do you notice? What else do you notice that we have telling us here? The first buy here was the 200-day. This blue line is the 200-day moving average. So we got oversold on the 200-day, which was right here. Like, this was the oversold day. We went a little bit lower the next day, then bounced, right? So at that point, you're telling yourself, okay, if we can't hold the 200-day, it's probably no good, right? So, like, again, you can't use one thing in a vacuum, but you don't need a lot either. Like, you have things telling you there's risk at these points. So, but this is a GFC. This is a rare one-off, okay? And it can happen and will happen again, right? But even in this case, if you bought this one, okay, and then you bought and doubled down on the next oversold, and really, technically, if we're being honest, you technically didn't hit it, but I mean, I would have bought that for sure. I mean, you get down this low in RSI, I'm buying. It's just the way it is, right? So, and then you come down and you get the real capitulation of '08, like the greatest crash of all time, and you bought from here, which was, yeah, this candle, and you were just buying all the way, through, I mean, really, as long as RSI is down here, I'm accumulating, right? But you're buying all this because you're deeply oversold. And then what happens? I mean, it's all like in the moment, this is going to feel like shit. For sure. Right? It's the GFC. Like, it was a year of fucking, but it was 1 year. Look at the next fucking 2 decades, man. Like, you just buy when it gets oversold. And you have a plan to buy more if it gets more oversold. You start buying at that point. And when you get down to these levels, you just start buying aggressively. Understanding that that's a longer time frame commitment. Several months to several years, right? Again, it's the weekly time frame on SPY. Let's go back even further. Now we're in .com bubble. Okay, this is the .com bubble, which this is probably the most similar market to what we have today. Like, we're in this fucking euphoric, crazy ass move. But you notice how volatile this bitch was? Like, look at this. From this dip to that one was 30%. And then from this dip, sorry, to that one, I went the wrong way. Oops. This dip to that one, 42%. Like, it doesn't look like much, but there's some big ass moves up and down. And then this drop, 22%. So you can see, even in a bull market, you have big crashes. What's that remind you of? I say crashes, but they're not really crashes, just drawdowns. What's that look like? Same thing, right? Volatility in a bubble increases, but because of that, you make more money faster. Like when you buy the dips, right? The returns and the speed in which you get those returns is accelerated. Okay? So anyways, let's get back to our point here. So if we said every time SPY gets oversold, I'm going to buy, right? And I'm going to, no matter what, on the S&P 500, I'm accumulating underneath the 200-day moving average. Like, for sure I'm doing that. Here's your first drop. Right here. You got oversold on this day. So right here. Went a little bit lower, right? Like, I'm not telling you you're going to catch the bottom. I'm just telling you, it's telling you it's a good time to buy. And this is, again, this .com bubble bursting. Okay? So if you bought here, your first buy, to the very bottom, you would have been down 37% on that initial investment. However, you would have been accumulating from this point, right? Because you know, okay, so we bought, and then we came all the way back up here. Got back to the 50 on the other side. Like, so we bought the first time here, came all the way back down here. Oversold, so it's telling you to buy again. And then you bought, and then it comes all the way back down here. It's your next oversold spot point right here, right? So say you put, I don't know, 10 grand in each time, right? By the time you would have got down here, you might have been down, I don't know, $8,000 or $9,000. Like, for sure, not a good feeling. But this is over 3 years too, right? So it's not like it was all at once. And you, at that point, like, if you're doing that and you have the patience to do that, then you're a long-term investor. Like, you believe in a long-term theory of the stock market. If you did it and you just literally bought every oversold signal, and you were down, let's say on average, like 20% on your $30,000. So let's say $6,000, right? Sure, that sucks. Okay, but then what happens? By the time you get to like right here, you're at break even, and then you get all this, which from the bottom here, which is this day, all the way to here, it's a 100% move, right? So you might have missed out on a little bit of that, but you basically would have turned your 30 into 60, minus a couple thousand, right? Case in point. Now, the reason that this indicator is so important is because people say, oh, just dollar cost average, dollar cost average. Well, look what happened, though, in this case. So this is the lost decade, because if you bought here, yeah, you were good, but if you bought up here, right, this is 2000. This is 2007. For 7 years, your money was down and you just broke even, and the second you broke even, what happened? Crashed again, right? And then 2013 was when the market finally found its legs from this entire decade. But if you used this indicator and you got out when it turned red, which again, back then they didn't have tools like this, but you do, so don't be stupid. Like, take advantage of that, right? Then you're good, right? Like, you're good, you know? And sometimes you will have flash crashes. Like, sometimes you will, right? So like this, here's a scenario where, like, okay, I don't know what happened here. No, this is COVID, right? So in this case, it would have been really rough. Again, COVID was a one-off, but if you, even then, you still made money, but that sucks pretty bad, because right before that you were up 22%, and then all in one day you lost most of it. But you gotta protect your principal at some point, right? And like, if you'd waited, it actually gave you a day to get out here, right? Like, again, you can't look at this stuff in a vacuum, okay? And it's obviously easy to say all this in hindsight. I understand that. But this tool helps you catch long-term trends on the weekly time frame. It just works. And on the daily. I mean, even on the daily. This honestly is, I use it on the daily more than I do the weekly. It's like, let's go back to COVID again. Okay, here's COVID. So in this case, it saved your ass completely. Look at that. It turned red this day right here, because on that day, the 5 crossed the 9, and that started to turn the cloud red. I'd have been de-risking right there on that fucking part of it if I was in here or if I was in way back here. Either way, I'd have been de-risking on this day, because it's telling me to. Don't use your heart, just look at the fucking color, right? Look what it saved you from. Like, good lord. Right? Like, you see how when the color changes, like usually the day before the move really starts, you get the initial cross. You see how, like, it's all after this, but there's like a gap here. When you see this gapping action happen, that's usually when it's your time to get in or get out. So here it is again, same thing. Right? And here, right here, right, this day, told you. So again, you're not going to time the absolute peak and trough of every move doing that, but if you going forward, if you buy and sell off those colors, it's really hard to lose any massive amount of money. It is. It works. And if you combine that with buying when things are oversold with a long-term mindset, this is what, specifically with index funds, this works really well, or like ETFs, like the S&P 500 here. It just works. It does, right? If you believe the market is going to continue to go up and to the right over time, always, which, newsflash, that's what it does. Then this helps you know when to get in and out of the market. And if you don't want to time it, like let's say you do just want to stay invested, even though this thing is clearly telling you get the fuck out right here, right? Like, even though, okay, so at least right here you buy insurance, right? So like, okay, the cloud turned red, I should probably add some puts here. I should buy some SPY puts here to protect my position. And what would have happened is those puts would have made you more money than you lost on this fall if you correctly balanced them with your portfolio, right? And then you're like, okay, well, what if it went the other way? Well, guess what? You're signed to get out of them. The puts would have been this green day right here. Like, so, okay, here you bought puts, right? Wrote them. You didn't make shit, honestly. You might have been even a little down on that insurance. But again, it's insurance, okay? The goal isn't to make money, it's to protect gains. And then you had your indication to get out of them right here on this green day, right? Like, okay, so if you did that, and you bought them on one of these candles, and you sold them on this candle right here, this pop-up right here, you 100% would have lost money on those puts. I'm not telling you wouldn't have, but it protected you. But what's funny here is if you were just like, I don't trust this for whatever reason, I don't know, maybe because there's like no volume, right? If you just stayed in them because you're like, I want to see it prove itself first, look at how much money you would have actually made on the puts, right? So like, even if you bought them here, right, and you bought enough time, because that's a few months later, if you bought puts like long dated puts, which you probably wouldn't do, to be honest, then you're good. Also, another thing you can do is if you have puts and you get up on them because you sell, or you buy them when it turns red and then they go crazy positive, you can run a stop loss on your puts like you do your stocks. So if the puts are up 50%, like set a fucking stop on the thing, right? Like 20% back. So if it starts to go back up, like you get stopped out, right? But I mean, generally speaking, if you're trading a trend, like if you're buying puts, you're trying to do it for the same type of thing. So like in this case, you can clearly see distribution. This was the easiest market to read. I literally called this play-by-play last year, okay? It's not always like that, but like, you know, so here we go. We have this euphoric freaking move that we're in, right? Cloud's clearly still green. Should you be buying at this point? Absolutely not. Absolutely not. Look, I mean, look at this. You're late, man. You're super late. Your day to get in was here 10% ago, right? 10% in freaking a month and a half. Insane. This market is stupid right now. Okay? And I'm telling you, we're so stretched. So then you look at the moving averages. Look how stretched we are from the 50-day. Like this thing is it's gonna come down once, and at least touch this, right? You will get another chance. You will get another chance to buy when it makes sense to buy. But you don't just buy a candle that comes down here. Let the cloud tell you when to buy the trends, right? So I mean, this works with ETFs. It works with stocks. It works extremely well with NVIDIA. Like NVIDIA is probably the king of it. It just works insanely good with NVIDIA. And you can go look. Like you can backtest it with your own eyes. Amazon works great. Meta's kind of an annoying stock to trade, but it works, right? Like even when it fakes you out, I told you I lost 3% on this fake out right here. You know, not totally convinced that it did fake me out because this thing still looks like it might want to go, and you got this big old base building. I mean, this thing could rock it. It could. It could. And it reclaimed the 50 today. So it did it the other day, and it did it again today. You know, like this could get a move in here pretty soon. So I got my eyes on Meta, right? I got my eyes on Meta. I'm watching. But I'll tell you why I don't like it is because it's like we're due for a pullback, right? So I don't know if I want to buy stocks right now. ServiceNow. Gave this one out recently. Told everybody to buy here. Look at this. Look at this giant dump this stock took, right? So here we go. If you bought this day, got out here, about break even, bought this day, if you're still in, you're still up, right? I personally sold way the fuck up here because we were way outside the moving averages and we were slamming against the 200-day moving average, so I was selling into this fucking move because it was just like euphoric. It was a trade for me, not an investment, right? I'm just saying, like it's not 100% you can just use this and just guarantee to make money. I'm not saying that, but like use it. It works, and it works particularly well on certain things, right? Like I showed you guys the ETFs, and I keep going to Ethereum and Bitcoin because it works, man. Like it just does. So I was actually telling Gerald I thought we should take a short here. I remember telling him we should start the yellow account with a short on Bitcoin right here. And he's like, I don't know. I was like, yeah, I know, cloud's still green. We could wait. But see, I was right, and then it turned red, and then look what happened after it turned red. The move accelerates. Like, see that? Protected your ass once again. And if you bought when it turned green, look at this. Look at this. This was just a quick trade. Look at that. This is April to May. So in a month, they made 15%. Pretty good swing trade, right? And like this short. Oh my God, this short. Short would have printed. And then what you're gonna see is when it gets down here to the 200, you're gonna see some people start buying the shit out of this, right? And you're gonna want to buy it because you're like, oh, it's at the 200. Don't. Just wait. Just wait till momentum returns. Because even if it comes down here, gets bought, it's going to get sold back down, bought, sold back down. Like, it's going to base out first. See how it does that? Big move down, base. Big move down, base. Big move down, base. Right? Big move up, base. Big move up, base. Like, you get sideways before you get direction. Almost always, unless something is actually happening to be concerned about, and it happened quick. Right? So COVID would be one scenario. Tariffs, in my opinion, were predictable. I told people to short that market, and I told people to buy the dip. The fucking president was telling you what to do. That one doesn't count to me, but it did happen quick, right? And then the GFC, I was a kid. I can't sit here and say I have experience from that. And boy, does it seem like a challenging thing to go through. I mean, we lived through it, right? But like, again, like, there's indications between the macro picture, what's going on in the world, and then the charts. You look at the charts in tandem with what you're seeing going on in the world, and that tells you, right? So like, I'm watching this right now and expecting maybe to see this slow down. Why? Well, because we're fucking stupidly elevated up here. We went way too far too fast. You look at any other time in history that the index has done that, it usually gives it all back. So I'm already looking at it like that, okay? And then we're starting to roll. Today was the first sell day. Pretty good volume, more than the buy volume yesterday and the day before, okay? So not super convincing. Doesn't really mean anything. But technically speaking, we're super overbought here. Like, we have been for quite some time. Like, literally since here, we've been overbought. There's a gap to fill here, right? Like, there's reasons for the market to come down. And then they got the 50 down here. But at the same time, as you have these overbought conditions, oh man, it's really dropping after hours right now. Holy shit. To go look what's going on with that. Woo! As I'm speaking, it's happening. Look at it. Look at it. Look at it dumping, dude. This is the fucking index. Man, I should have bought puts today. I knew it. Holy crap. Sorry, I'm checking my phone because this is happening in real time. I gotta see this. I told everybody, I'm gonna show you something in a second. So look, this is today. Started selling today, and now we're accelerating after hours. Like, it's really getting bad after hours. Pulling back all the way to on the 1 hour, this bottom moving average, right? So if you're going to see buyers, you'd expect them here. But look at the sell volume at close. Huge sell volume at close, right? So we're dumping. The market is tanking at the moment. Absolutely taking a shit. To go figure out why, what the news catalyst for that is, but we're dropping. So what was I going to show you? This is crazy because it's happening in real time, so I'm going to show you. So this was, well, here's one message. This is today before or right at close. Sell in May, go away. Looks to be playing out in my opinion. Even if first it gets bought, it gets sold. Nature of the stock market. You have to wait for trends. We just had 3 sweet months. Only way I'd be buying SPY is if I saw 742 and buyers step in. I shall show you guys that in a second, which to be honest isn't likely. I'm not saying we have topped yet, but I'm saying it's not smart to chase now. Signs are there for a pullback. So I literally cautioned about this today and last night. Right? How did I know? Well, if we go down So we're super overbought here, and we go down to the smaller time frame. You could see momentum stalling on the 4 hour, right? Like it's very clearly stalling out. And then you go out a couple time frames and just look how fucking overbought we are, and we're above all the moving averages, and the longer term moving averages are way down here. Yeah, bro, it's time to take risk off there. And then we have catalysts for this week. We have the jobs report coming out. Earnings is behind us. We're super overstretched. The war's still going on. Oil's still elevated. Like, yeah, it's a recipe for disaster. And just look at it tank. So anyways, hopefully I made my point clear. I gotta go check in with my members and see what's going on. This is crazy. But 742, remember I said 742 in there is where I'd be looking to see if people are buying? Well, that's the bottom of the cloud. Respect the cloud, right? That doesn't mean they're gonna get the absolute line. Somewhere around here you'd expect people to start buying if the market's gonna keep trending up. So we'll see what happens. All right. Adios.